Once again, good afternoon, everyone. So today we have the topic of key GST considerations in ITR and tax audit filing. So this is September. September is upcoming in another 2 or 3 days. So we have the multiple due dates that are lined up under Income Tax Act, especially. So the individual filing, that is usually the due date that is on 31st of July to 31st of July every year, it has been pushed to 15th of September. So that is also falling in September. Then the tax audit report, filing tax audit report, that is on 30th of September. Then obviously income tax return for that, those audit assessees falls on 31st of October. So all the due dates are lined up in the upcoming month. So what are the GST considerations that you have to keep in your mind while filing the income tax return or tax audit report? See, I understand that many of you are representing companies and you might not be directly filling the tax audit report by yourself as such. But for sure, I am sure that even if the tax audit report, for the tax audit report, your support is much necessary to compile the information and report it in the respective fields of the tax audit report. So for that reason, and also 30th of November is coming up, where the last date to claim ITC pertaining to financial year 2024-25 is getting exhausted. The last date to report credit notes pertaining to the transactions reported that are the outward supplies that are reported in GSTR 1 during the financial year 24-25 is also getting exhausted. So for these reasons, definitely income tax return, the tax audit report filing, what are the particulars related to GST that are mentioned in the report. And you can also, if you identify those mistakes or those reporting aspects, you can cross-verify the details and make necessary corrections within 30th of November 2025. So that will put you in a driving seat to finish your GST annual return and reconciliation statement workings within the time limit, that is the due date, on 31st of December 2025, and you will be able to file an error-free return. And if there are any mistakes that you committed during the financial year, you can as well correct those mistakes. So we'll go directly into the topic. So what do we have here? We have set of aspects that I have pulled in from the tax audit report, the reporting requirements in tax audit report, that is form 3CD, and also the income tax return. See, we very well know that from ITR 1 to ITR 7, there are many returns in income tax that we file as a taxpayer. We also have the tax audit report for those taxpayers for whom the tax audit is applicable. It will be prepared and filed by the auditor. So these two reports have exhaustive list of details which can act as indicators which might help flagging GST non-compliances. So from the GST officer's perspective, we can try to look at the aspects that are reported in income tax return and also tax audit report, and what are the correlations that are possible from an apparent reviewing of these details, and if at all there will be some kind of inconsistencies which we can now itself identify and make corrections in the upcoming returns. So that is the major objective of this session, and I am pretty sure that I have been able to compile most of the aspects which are relevant for you and which will be useful for you in the upcoming month. So as I mentioned earlier, we'll begin with the data inconsistencies, form 3CD. See, form 3CD as a GST from the GST perspective, you will have to give the list of GST number under your PAN. So if you have multiple registrations across the states, so all the registrations you have to report over here. Each of the registrations, the particulars of the registrations, you have to list out over here under clause 4 of form 3CD. If you have the registrations which are particularly taken for deducting tax at source under GST or collecting tax at source for e-commerce operator or for other purposes, or you have an ISD registration. See, ISD was made mandatory from 1st of April 2025, and those who are having multiple GST registration numbers and also operating across different states are mandated to take an ISD registration so as to appropriate the common services across the entities spread over India. So for that reason, you might also have a ISD registration under your PAN number. So all the list of GST registrations you have to mention over here. Then comes the clause 10A and B. See, it is very surprising when we generally deal with many clients amidst the business, all the business improvements and the very hectic schedule. Amidst the hectic schedule, many of the business people, they often miss out to update the registration particulars in the GST portal. See, income tax return that is being filed only once in a year. So at the time of filing return, there is a high possibility that all the details, place of business, addresses, even the rental income that are offered in the income tax return, all these properties, the address details and other aspects might well get scrutinized. So there is a possibility for that. But it is not the same with GST. See, a new godown might have been leased out, and a new premises might have been added. A rental agreement has been might have been entered into only at the time of vehicle interception, where an unregistered place invites the attention of the roving squad officer. Most of the businesses do get to know about the penal consequences of amending the registration. So you have to also be mindful, be it proprietorship, be it company, partnership, any form of business organization, your GST particulars has to be up to date in line with the income tax particulars. If you are a company, then the MCA particulars, all the master data that is updated in the legal statutory websites has to align with each other. So if there are any discrepancies, it might invite a penalty or some kind of penal consequences. So we can easily avoid that. So at the time of filing income tax return, you can as well have a look at the place of businesses and nature of businesses which are mentioned in the income tax return, and those nature of businesses and the HSN code we have added in our master list in our GST registration, whether they are consistent, whether those are the businesses that we are really dealing with. So those kind of questions you have to ask yourself and get clarified, so that the details which are submitted in the income tax return and which are already there in the GST portal are one and the same. If there are any kind of deviations, then you can make an amendment through a non-code field amendment or a code field amendment, as the case may be. You can change the amendment particulars and make it in order. Then comes clause 21A of Form 3CD. See, here you can see that while the tax auditor is doing the verification of accounts and analysis of the financial statements, he might stumble upon some expenses. See, these expenses might be personal in nature. These aspects we generally come across in most of the cases which are proprietorship businesses. So for proprietorship businesses, these kind of expenses are very likely to happen. In general, for partnership firm or private limited companies, these kind of personal expenses which are being generally charged to the profit and loss account is a very highly unlikely occurrence. So maybe in partnership firm, it might so happen that these kind of expenses are directly debited to the partner's capital account or a current account. That is also likely to happen. But in most of the cases, we come across the proprietorship businesses where the personal expenses are charged to profit and loss account. So at the time of filling in details in schedule business and profession in ITR, income tax return, ITR 3, so there these kind of expenses will be disallowed and added to the added back, and it constitutes income, and for on basis of that income tax applicable rate is applied and tax is calculated. So what does this indicate? See, Section 17 subsection 1 and 17 subsection 2 of CGST Act 2017. What does this section say? Section 17 subsection 1 talks about the situation where the inputs and input services are used both for business and non-business purposes. So this is what that section talks about. Then section 17 subsection 2, it talks about the situation wherein the inputs and input services are used both for effecting taxable supplies and exempted supplies. So these are the two important sections which are which talks about the apportionment and blocked credit. So according to section 17 subsection 1 and 2, you can see that whenever there is a non-business expense that is incurred by the business, then you will have to apportion the input tax credit in some ratio. That ratio where it is specified in the rules. We can refer rule 42 or rule 43 of CGST rules. So those are specified in the rules. How to identify whether a particular expense is related to business purpose or not. So that is why we have come here. Here, that personal expenditure, if any value is reported over here as personal expenditure, then the GST officer might be suspicious about the occurrence of a non-business purpose transaction. And he might also say that, see, you have to calculate common credit as according to rule 42. As per rule 42, the total input tax credit, from the total input tax credit, the ITC pertaining exclusively to exempted supplies, then blocked credit, then exclusively taxable supplies, all these ITC has to be subtracted, then you arrive at the common credit. So out of common credit, 5% is attributable as non-business purposes, ITC pertaining to non-business purposes. So there is a high possibility that if in your tax audit report, your tax auditor has reported some expense as of personal nature, then the GST officer might take a stand that there are some ITC which might pertain to the non-business purposes, and you have to comply with rule 42 and reverse 5% of the common credit. So that is a possibility. It might happen. So you have to be mindful of such expenses. If at all there are some such expenses, please do it separately. Have a separate bank account in the business's current account. Do not bring that in the profit and loss account, and please do not bring those kind of expenses to your businesses. Now, clause 21B. So there are transactions for which income tax, as per Income Tax Act, you have to deduct tax at source. So if there is a failure to deduct tax at source, and the recipient, when you are making payment to a resident and to a non-resident, separate disallowances apply. So if the payment is made to a resident, then 30% of such expenses are disallowed. So if you have not deducted TDS and then the expenses are disallowed, if you have made the payment of such TDS within the due date of filing income tax return, in that case, then you can claim it as expense. That is how it operates. Whereas in the case of non-residents, it is 100% of the expenses that is disallowed. So if at all there is an expense, see, in today's situation, most of the businesses, they try to increase their presence in online, and also the digital marketing is also very much buoyant now. So you can see that the many freelance website developers, many freelance digital marketing agents, they are working from abroad. So you can avail the services of these people who are staying abroad. The logo designing, be it brochure designing, many kind of expenses. So there are also some subscriptions, the workspaces, the apps like AI tools. Many AI tools are getting developed outside the country. And if you are making any subscription of these AI tools, you will be making payment abroad in foreign currency, make it by using your credit card or debit card, whatever method of payment may be. So these payments attract reverse charge mechanism. because import of services for a consideration in course of furtherance of business is a supply under GST, and the recipient being the person who is situated in India is liable to pay GST under reverse charge mechanism. So you have to be mindful of this. Many proprietorship businesses, they use the auto pay facility and keep it in the autopilot mode. Your credit card or debit card, it is once activated and every month the payment will be auto debited. So for this reason, there are no invoices. In many situations we have come across, it is very difficult to get the invoices related to these expenses. And for this very reason, you have to be mindful. If at all your auditor has identified these transactions and reported here for non-deduction of TDS, then this is also indicating the GST officer that there has been an import of services for which reverse charge mechanism provisions might not have been complied with. So that is also a probable situation here. Next, clause 23. This is an interesting clause. Here we talk about the related party transactions. See, related party transactions in the financial statements, when a company it is prepared in accordance with Schedule 3, there are separate reporting parameters given over there. So related party transactions, who are all the related parties, what are the nature of transactions, the value of transactions, everything would have been reported over there if you are a company. If you are not a company, then the tax audit report is the other area which you can check the related party transactions, the status of those transactions. And here we will see a few examples which has very much of significance while you are reviewing your GST compliances for the previous financial year. So the rent paid to related persons. See, here I am focusing on the situation where there are transactions between related persons and distinct persons. So related party, I will be also talking about the distinct person. As per the GST Act, when you have multiple registrations under same PAN, these two separate registrations are called as distinct persons. Whereas the director of the company, then maybe you have the common directors in two separate companies. These are called as related parties. So what is the important aspect with respect to the rental expenses that is incurred by a GST registered taxpayer? In general, we can see that many proprietorship businesses, they lease out premises which are from the persons who are very much known to them. They might be their spouse, they might be their father or mother. So for that reason, a rental agreement would be entered into. A rental agreement would be entered into at the time of obtaining GST registration. See, without a place of business, proof of place of business, GST registration could not be obtained. So for that reason, a rental agreement would have been entered into, and later on you will be undertaking the transactions, you will be doing business, everything will happen on just in an auto mode. So just think about it in this way, where you have entered into a lease agreement with your partner or with your parent, and you are dealing in trading of some exempted goods. You are dealing in trading of exempted goods. So in this situation, the rental expense, what you are incurring in your P&L account, see, you might not be paying any rent at all for the reason that they are your parent. Actually, you are not paying. Only as per agreement there is something, and as per the agreement, the value given is 5,000 rupees per month for ad hoc example, ad hoc amount. So it is 5,000 rupees per month. So this amount you are also not paying. So it is highly unlikely for the person who's handling GST compliance, GST return filing, to know that there is something called as rent which is lying there and you are not paying. He will not be knowing that. So what happens in this situation? The officer might step in and say that, see, he will have the rental agreement in the GST portal. So he will say that this transaction is between related persons. So consideration is not required to treat this as a supply of service under Schedule 2 of CGST Act. So for that reason, he would say that, see, I will invoke Schedule 2 and say that even without consideration, this is a supply, and I will say what is the value. See, I will value it. Why he is insisting on valuation? You can say that there is Rule 28. Under Rule 28, it is given that if the recipient is for the transactions between related persons, if the recipient is entitled to full input tax credit, 100% of input tax credit, in that situation, then the valuation adopted by the supplier in the invoice, as reported in the invoice, can be considered as the taxable value, which is in compliance with Section 15 of CGST Act. But what about a situation where this officer invokes this provision, and you are a person who's dealing in exempted goods, trading exempted goods? So you will not be having the eligibility to claim ITC. For that reason, the officer would say that, see, 5,000 is not the rent, 25,000 is the rent, which is prevalent in the local area when I went and inquired. For that reason, I will say that 3 lakhs of rent is payable by you for this period, and you have to pay RCM at 18% on this. And ITC is also not eligible because you are fully dealing in the trading of exempted goods. So these kind of stance the officer might take. Related party transactions which are reported in Form 3CD might act as indicators for these kind of non-compliances towards you. Then comes the intellectual property, which are used by two distinct persons. See here, there was a case in 2022, I think. In 2022, State Bank of India and SBI cards are two separate entities. But for whatever reason, SBI, there is a logo for SBI. They have a trademarked logo, and this also along with the tagline, I suppose, also along with the tagline was also used by SBI cards. So this is also a transaction which is between the related persons, and it is an implied transaction. There is no invoice, there is no consideration charged by the SBI to SBI cards, and the transfer happens like in this way, because the ownership was lying with the State Bank of India, and SBI cards, which is an entity which was later on constituted, it was also using the same logo. So for this reason, the officer, GST officer, invoked the Schedule 2 provisions and said that this is a supply even though there is no consideration. And why Rule 28 does not come to rescue of SBI Bank? Because see, for banks, you can see that either 50% of the input tax credit you can take. That is one option. Or for each of the reporting period, you have to proportionately reverse the total ITC on the basis of exempted turnover. That is taxable turnover to exempted turnover ratio. So banks being into lending and taking deposits, most of the transactions, most of the income, substantial amount of income would be interest income. So for that reason, in general, most of the banks prefer to go through the 50% of ITC route. And for that reason, the GST officer might think that, see, anyway, we'll adopt some market value because Rule 28 will not come to rescue. And for that reason, some GST would be paid by the SBI cards, SBI Bank. So that is also not eligible, because 50% of the ITC, they will have to anyway reverse. This will come as a revenue for the government. So for this reason, even though there are transactions which happen between related parties for which no consideration is charged, but GST officer might invoke the Schedule 2 provision and apply some value and charge GST on such transactions. So you have to be mindful, and you have to also review the transactions that are reported in your clause 23 under Form 3CD. Next comes the corporate guarantee. See, corporate guarantee is also of the same nature. So for understanding, for easier understanding, I have taken Adani Power and Adani PVC Manufacturing Company, the PVC Pipes Manufacturing Company. It is a separate entity of the Adani Group. So these two groups are there. So say, for example, they are also giving a corporate guarantee. A corporate guarantee is being given to Adani PVC Manufacturing and Adani Power, which is dealing in renewable energy, solar power or wind power. So they are dealing in renewable energy. They are completely dealing into exempted supply. So if there is any ITC that is coming there, if they are giving any corporate guarantee to PVC manufacturing company and they are getting any income out of that, even if there is no actual consideration, 1% of the value of such guarantee amount annually for each year, say for example, if the guarantee is provided for 3 years, then for each year, 1% of the total value of such guarantee amount is treated as the value of supply, and for that GST has to be paid. And Adani Power, being a company which is completely dealing in exempted products, will not be able to claim any ITC, and they will have to reverse this ITC. So that is the kind of impact that you can see. And also there are other companies or other situations where similar kind of situation can occur. Like in the case of Adayar Anandabhavan, you can see that there is a restaurant chain on one side which will be charging 5% of GST and will not be entitled to any input tax credit. And on the other side, they will be having a sweets and snacks which charges 12% of GST along with the input tax credit. When these two businesses operate in same premises, there are occurrences, there are many chances that a common inputs might be used, common input services might be used. So for all those reasons, it is very much essential to have a detailed analysis of the related party transactions. For that, you can also rely upon Form 3CD, Clause 23, which might as well be relied upon by your GST officer. See, as of now, you can see that only during the proceedings where which are initiated in the nature of department audit or inspection, the officers get their hands on the financial statements of the company. Even though for turnover of 5 crores and above, all those taxpayers who are having turnover of 5 crores and above are filing GSTR 9C and also enclosing the financial statements along with the 9C statement. I don't think the officers are having a look at those statements. And in most of the cases, the profit and loss account and the balance sheet, the face is only uploaded without the schedules. So for that reason, they might not be having sufficient time to analyze those transactions. But once the data sharing is started between the income tax department and the GST department, see, earlier in service tax regime, you can see that in Form 26A, there will be some income for which TDS has been deducted, which is compared to the service tax return. That always happen. So similarly, you might as well see several fields from the income tax return, and also the tax audit report might pop up, which are compared to the GSTR 9, 9C or 3B or 1 return, and discrepancies for which detailed explanations would be sought from you. So at the time of filing 3CD, Form 3CD, or at the time of preparing income tax return, you make it sure that the documentation part is kept ready and all the details which are relevant, like as I'm mentioning here, which will have some kind of implication in GST, you already have the working, so that later, at the later point of time, when a notice is served upon you, you can easily compile the details and make a reply and submit to the department. Now we move on to Clause 26. See, Clause 26 talks about the expenses which are allowable only if those are paid. Section 43B of Income Tax Act talks about these payments, mostly statutory payments. So it is eligible only if you have made such payment. You can claim the deduction only if you have made such payment. For example, PF, ESI payments, which you will be deducting from your employees. If you are making payment of these expenses, then you can claim it as deduction. If you have not paid it, if you have kept it in abeyance without making payment, then you cannot claim it as expenses in that particular year. And subsequently, when you are paying it, you will be able to claim it as deduction. Here there is an interesting aspect. Clause 43B subclause H was introduced, which was to provide safeguard for micro and small enterprises. In general, MSME is told, but the safeguard is only available for micro and small enterprises. Unlike other clauses of 43B, which says that even if there is an outstanding due of statutory nature, which is as of the 31st of March of any year. For ease of reference, I am using 2025. So 31st March 2025, if there is any outstanding dues which are mentioned under 43B, and if you are making the payment within the date of filing income tax return. So if you are making the payment within the date of filing income tax return, then that expense can be claimed as expense in the respective year itself. For financial year 24-25 computation itself, you can claim those expenses as deduction. It is allowed. But for 43B clause H, for this clause alone, if you miss the due date of payment, be it 15 days or 45 days, where there is an agreement with the supplier, if you have missed that date, then it is difficult for you to claim deduction in that year itself. It is not difficult, you cannot claim deduction in that year itself. Only in the subsequent year, when you have made the payment, you will be able to claim deduction. So you will be very well aware of this section. It has been around for a while. I think even for previous year's tax audit report at the time, you might as well have prepared the schedule of MSME suppliers, and also those who are private limited companies, they have another mandatory compliance, which is a half-yearly compliance. MSME one form you will have to file. So you will already be having the master list and the list of vendors who are MSME. You might have also sent some letters across to them and get confirmation about their Udyam status. And the MSME 43BH clause, this is not applicable for traders. It is only applicable for manufacturers, service providers, not for traders, and also for micro and small enterprises. So how does this comes into picture with GST? What might entice the GST officer over here? So if there is any due to micro or small enterprises and there is a disallowance under this clause, which is reported by your tax auditor, immediately it sends out a signal to the GST officer that this company is not making payment in time. There is Rule 37, which states that within 180 days, you have to make the payment to your supplier along with the GST, the whole transaction amount you have to make payment. If you are not making payment within 180 days, then the input tax credit which you have claimed as ITC shall be reversed. And upon subsequent payment, then you can reclaim such ITC. So that is how Rule 37 operates. So the officer might think about the possibility of violation of Rule 37 here, because you have not made the payment to MSME suppliers on time. It might be due to dispute. See, under 43BH, there might not be a violation, but under GST Act, it is a violation. But only if it is reported over here, it might attract the invitation. It might attract the notice of GST officer. Otherwise, it is not highly unlikely to get attracted. There is also another possibility where a business entity is a company. And as per Schedule 3, you will have to give the aging report. I'll be showing you the format of how you report the aging report in upcoming slide. But I'll just share about that topic also here. So if you are mentioning any payable that is overdue for more than 1 year, that is obviously for more than 6 months, in that case, the officer might ask you for a bill-wise breakup and the respective ITC, the proportionate ITC for the transaction value which is outstanding has to be reversed. So you have to be mindful of this situation. And if there are any values that are reported under clause 43BH in your 3CD form, then you have to prepare this, and within filing the date of filing annual return itself, you can make the necessary reversal and keep it under your temporary reversal head, and later claim that ITC once you have made the full payment. So that is also possible. So these are the relaxation about 43BH, which I already spoke about. There is no relaxation actually. 43B other clauses there is relaxation, but 43B clause H there is no relaxation. Now we come to clause 41. Under clause 41, the details about the refund claimed and demand under any other tax laws has to be reported. Other tax laws than Income Tax Act, that has to be reported. It is only a reporting section. There is not much significance over here. Anyway, GST demand will already be captured in the GST portal itself, but GST refund also you can maybe mention over here. This is only for a reporting purpose. There is no other significance where the GST officer might be able to get some indication about any non-compliances. I don't think there is something in this clause. So it is merely for reporting. But you can make sure that if you are yet to prepare the clause 41 for the tax audit report, then you can as well include those details over here. Now we will come to the final clause of the tax audit report, that is clause 44. See, clause 44, it was kept in abeyance for some couple of years. Only after that it got introduced, and any tax audit report which is filed after 31st of March 2022, then you will have to report values in this clause. So what does this clause talks about? It asks you the details breakup of the not the detailed breakup, the breakup at a macro level of the expenditure which is incurred in the profit and loss account. You can bifurcate it under two heads. Either the expenditure is incurred with respect to GST registered suppliers or not GST, the suppliers who are not registered under GST. So under the registered category, you have the composition dealers, you have the exempted entities, you have the registered entities. So like this, it is categorized, and the details will be taken up from the audited financial statements and which will be populated over here. So what are the pitfalls, or what are the consequences that might attract if there is any discrepancy between values reported over here and values reported in GSTR 9, 3B, 9C, or any return that is furnished under the GST Act, that we can see in the upcoming slides. So here, few reporting aspects I will explain. So clause 44 already, as I mentioned, it is applicable for all the tax audit reports which are filed after 31st of March 2022. See, we have come across certain practices where clause 44 is not actually filled. Only a declaration is provided wherein it is stated that details relevant to filling the clause 44 is not able to be obtained by the taxpayers. That is the detail which is the disclaimer that is mentioned in the tax audit report. But from our side, from Zen Tax Clinic, we suggest that in the tax audit report, you give the breakup of expenses under clause 44. It will definitely ensure more compliance, and it will also add as a check for you to reconcile the P&L account expenses and also the GSTR 2B in which your suppliers have filed your invoices over there. So it will act as a cross verification mechanism. Then you will have to report all the transactions at PAN level. See, even if you have multiple GST registrations, you have to compile the data and then report it at PAN level. The only bifurcation that is necessary is the capital expenditure and the revenue expenditure. That bifurcation is essential. Otherwise, it is very difficult to compare it with GSTR 2B values, or even for that case in GSTR 9 table 8A values is auto populated. There 2A, from 2A it is taken. Then you have GSTR 2B. Now actually GSTR 2B values is getting auto populated in GSTR 9. So for that reason, see, there will be many differences in invoices as per ITC as per books and ITC as per GSTR 3B, that is net ITC that is claimed. So for that reason, it will be very helpful if you have the detailed reconciliation of the figures mentioned over here. What if the auditee, the person who is subjected to audit, is not registered under GST or is not required to be registered under GST because they are doing an exempted supply? So for that reason, even they are a GTA for whom tax is payable under reverse charge mechanism by the recipient, or a doctor who is engaged in healthcare services which is exempted under notification 12/2017, or a lawyer for whom also GST is applicable under reverse charge mechanism which would be paid by the recipient. For all these cases, even if they are not registered, clause 44 is still applicable. You have to mention the details in clause 44. So where does the section references that comes from? See, section 35 of CGST Act talks about the accounts and records, and also along with rule 56, you are mandated to maintain certain registers and the name and addresses of the person from whom you are purchasing the goods. So all these details you have to anyway keep it with you. It is only that clause 3CD is asking you to report those details. Anyway, it is not something which is new. You need not keep all these details with you, and now they are asking for a new information. It is not like that. From the enactment of GST Act itself, there are specific sections which govern the books of accounts, books keeping, and which are all the registers which are mandatory to be maintained by the taxpayer. So for all these reasons, you have to maintain these workings properly, and you have to report these values in clause 44 after making necessary bifurcation. What are few inclusions and exclusions? See, I am talking about clause 44. I am not talking about the consequences of reporting or non-reporting of clause 44. So I will explain 3 points alone here regarding clause 44. So here you can see depreciation under 32. Is it necessary to mention about depreciation? The depreciation being an allowance, it is not necessary to be reported in clause 44. There are schedule 3 activities or schedule 2 activities are also there, which are remuneration paid to directors. All these activities, whether it is necessary to include it in clause 44, it is not necessary to be included in clause 44. But the remuneration details, it will be reported elsewhere in 3CD. So those kind of details would be picked up from there itself. See, even now when the GST officers come for department audit, they will have a look at the clause form 3CD and they pick up the remuneration. Whether TDS is deducted under 192 or 194J is always scrutinized. And if the nature of relationship between the director and the company for making payment of such remuneration is an employer-employee relationship, then they are not peeking their nose into that. If at all, no, if they are engaged in a relationship of a professional nature, then they are asking to pay GST under reverse charge mechanism. So that is how it operates. Separate report, as I already mentioned, separate reporting of capital expenditure also will make the reconciliation much better and easier. So clause 44, we already spoke about all these points in length. What are the other few nuances related to clause 44? See here, I am a GST officer or I am an income tax officer and I am going through the clause 3CD, clause 44 of form 3CD. Here, unregistered vendors, the value that is reported in clause 44 corresponding to the purchases from unregistered vendors is huge. So I am looking at this figure and I feel suspicious, and I am asking you the details. I am asking you to provide the breakup of expenses from unregistered vendors. So this might happen because of reporting in clause 44. Otherwise, it is not easy to ascertain which are all the expenses that are incurred for the suppliers who are unregistered. So unregistered suppliers means there is some kind of possibility that there is a cash transaction or there is a bogus expenditure. The expenditure might not have incurred at all. So there is a possibility for that, and the income tax officer as well might ask you to get the detailed breakup of bill-wise expenses and the proof of payment also. So while reporting here, if there is a huge value of expenses which falls under the category of unregistered GST vendors, then you have to be mindful of such transactions. Then reconciliation working paper you will have to maintain. See, in the books of accounts, you can see that the total ITC, total expenditure will be based on the audited financial statements and audited books of accounts. It is not necessary that all these expenses, the suppliers has correctly filed their GSTR 1 return and it has reflected in the 2B. So for these reasons, there will be certain set of invoices which are already booked in the books of accounts, which are not reflected in GSTR 2B. There can also be a vice versa situation wherein the invoice is reflected in GSTR2B but not booked in your books of accounts. So there can be all these situations which can contribute to reconciliation differences, and for that reason, I urge you to keep proper working papers while reporting figures in clause 44. So there is also these kind of differences that might happen. So another important aspect is related to reverse charge mechanism transactions. See, even when you are reviewing the profit and loss account, there are rates, license and taxes, there are freight charges, legal fees, professional charges, many transactions. The name is apparently indicating presence of an RCM transaction. See, an RCM transaction as per notification 13/2017. It is an indicator. So even here, if there is a huge volume of transaction under unregistered GST vendors, it is also indicating a possibility of RCM transaction. So from GST angle also, there is a possibility of a missed out RCM. For income tax officer, it might be a possibility of a bogus purchase. So while reporting in these clauses, you have to be of it is of utmost importance that you segregate all the expenses accordingly and keep the back papers and working, so that if at all any queries are asked on later date, you can submit it and get yourself out of the situation. Next is the reconciliation of GST turnover. See, obviously, while filing GSTR 9 or 9C, or even before that, once the accounts finalization is over after 31st of March every year, a turnover reconciliation activity is a must activity which will be carried out by the businesses. So here I have just mentioned few situations which talks about the advances received. See, advances received, you have to pay GST for advances received. If it is pertaining to services, especially in the construction industries where the construction happens only after getting an advance. So you have to pay GST on the advances, and this will form part of a turnover under GST. Transactions such as branch transfers also is a supply under GST, whereas in your books of accounts, it is not treated as a supply. So there are many instances or many transactions due to which a difference between turnover reported in GST returns and financials might not agree. So these are illustrative list of certain transactions. Like it might happen that genuinely you might have missed to report certain transaction during the financial year. You can always report it in the subsequent financial year. And also GSTR 9 table 10, you can mention the transaction which are reported, which is pertaining to previous year. And also the advance adjusted and advance received that I already mentioned. Then the revenue from operations. See, there are certain transactions where additional charges will be collected in the invoice from the customers, like the packing charges or the transport charges. What happens? This is not treated as revenue in the books of accounts. This is adjusted against the relevant expenses. The transport charges might be paid to the transporter, which is collected from the customer. But for the valuation purpose of GST, for making payment of GST, this is also to be included in the taxable value. So for that reason, it will be included in taxable value. But in the books of accounts, if you see, that is not really income. So that is netted off with the expense. There will be a reconciliation difference. So in GSTR 9C, you will be explaining these differences in table 5. So as I already mentioned about branch transfer and sale of asset. Sale of asset is another important aspect, which is treated as a supply under GST, and it will be added to your turnover. Whereas in the Income Tax Act, only profit on sale of asset or loss on sale of asset will be captured in the profit and loss account. So this might also as well add to the differences. So discount, which does not falls within the ambit of section 15 subsection 3, which is a post supply discount, which is not, there is no agreement beforehand itself. So if you are giving such a discount, then you cannot issue a credit note under section 34 and adjust your taxable value and reduce your tax liability. It is not possible. For that reason, this can also be a reconciliation item of between turnover, GST turnover and the income tax turnover. So these kind of items you be mindful. Now we will move on to the AAS statement, and each of the transactions, the nature of transactions which are reported in the AS statement. So here I have tried to bring in certain transactions. If you have gone checked the annual information statement or TAS statement in your income tax portal, you can see that most of the transactions I have listed down here will be reported out there, like the salary, rent received. I have also mentioned the GST impact. You might refer this later as well. I will just take you through few important points which I thought is most important. It might trigger some ITC reversal. So the transaction, there are two transactions. Explanation to Rule 45 says that as per section 17 subsection 3, if you are calculating ITC reversal for Rule 42 and Rule 43, then the transactions such as sale of land or building or sale of immovable property and sale of securities, for these transactions, a certain value should be considered as a exempted supply. And for this transaction, ITC has to be reversed. Common ITC has to be reversed. How much is the value? The value of sale of immovable property will be the stamp duty value. Whatever value is adopted as stamp duty value, the same value has to be treated as exempted supply for that particular period. And you have to compute common credit reversal in line with Rule 42 and Rule 43. For the transaction in shares, see, now many of the sole proprietors, they are investing in equity market, investing in mutual funds. So transaction in securities, 1% of the total value of the securities is treated as exempted supply, and for that also Rule 42 and Rule 43 applies. So these details which are reflected in AIS might be provided to the GST officers also, so that they will be able to get hands on these details and send you notices for demanding ITC reversal on exempted supply. See, the other exempted supply will be reported in GSTR 1 or GSTR 3B or GST annual return. So on that basis, even in the IIT notices that we have been receiving for past 2 to 3 years, you can see that the total ITC that is reported in 4A5, table 4A5 of GSTR 3B is taken as the common ITC, and the reversal under Rule 42 and 43 is demanded. But here, these transactions, which are not much prevalent and many of the taxpayers are not aware of these transactions, there is a possibility that these transactions might come to the notice of GST authorities through the AS statement, and they might ask you to reverse the corresponding ITC. So there are also certain transactions like outward foreign remittance. For that also, outward foreign remittance might as well be termed as an import of services. Then you have the rent payment transactions. So these kind of transactions you can very well check and verify later. So these are the two important aspects regarding sale of immovable property and sale of securities I wanted to share with you. This is the explanation that I spoke about. Then there are a few other aspects related to income tax return. So income tax return, if you are choosing old regime, the insurance payments under ATC, Chapter 6A, ATC, deduction will be claimed for making payment to life insurance payment. So for these expenses, input tax credit is not eligible. For also medical insurance, input tax credit is not eligible. So if you have claimed any deductions under Chapter 6A in your income tax return form, it might as well indicate there is a possibility of ITC reversal, and that might be demanded from you through a notice. And also the expenses claimed against the speculative income. So I told about the Rule 45, explanation to Rule 45. So speculative income is generally regarding the sale of securities, shares and securities. So the transaction value will be huge. The profit might be only 5 lakhs, but the transaction value might be 10 crores. So that is the size of the transaction. That is how it happens. So please be mindful if you are doing any trading in the forex options or intraday trading, all those transactions, there is the possibility that section rule 45 might trigger and you might have to reverse ITC. Then director's remuneration, and another important point regarding 44 AD and 44 ADA. Say you are filing income tax return. You are showing you are engaged in providing services. You are engaged in providing services, and you have reported a turnover of 18 lakhs rupees during the financial year 2024-25. And you have also received interest income of 3 lakh rupees during this year. So you have filed the income tax return by showing 21 lakh of income. So here you can note that 18 lakhs of service turnover and 3 lakhs of exempted income as per GST. You are mandated to get a registration under GST as per section 22. And the officer might say that you have not registered and not paid GST for that 18 lakhs, and tax, interest and penalty might start to trigger. So please note, every year when you are hovering around the 15 lakh to 20 lakh of income, please make sure if there is any other income which are of exempted nature and the aggregate turnover, if there is any possibility for the aggregate turnover to breach the threshold of 20 lakh rupees, in case, then you will have to obtain a GST registration and start paying GST. Creditors aging, I already explained. This is the schedule which is enclosed along with the Schedule 3 format of the financial statement of companies. Then these are the general transactions related to, see, I already explained about the purchase transactions that are reflected in GSTR to be. The income tax department might as well take some assumptions that if there are wide variation between transactions reported in GSTR2A, the expenses corresponding to which you have made payment to your suppliers as per GST returns, and also the expenses which are reported in income tax return. If the expenses are higher, which is significantly higher in income tax return, then the income tax officer might assume that these expenses are fake or bogus, and it might get assessed as your income. Then credits to sundry expense account. See, there might be transactions. If you run through the financial statements of many of the companies, you can see that advance received will be there. If you are a service provider, or if you deal in goods and services, and you have an outstanding balance which says from supplier, it is very likely that the GST officer might ask you to pay GST on advance. As per Rule 50, even if the rate of tax is not ascertainable, even if the type of supply, whether it is intrastate or interstate supply, is not ascertainable, you have to pay GST at the rate of 18%, assuming it as a state. I don't know what I will supply, and and remain by not paying the GST for such transactions. So this transaction also you have to be mindful. Then there are certain transactions which I think I already discussed about the RCN transactions. I have given here an indicative list which you can refer later. Finally, there is one more point I just wanted to discuss with you. See, for export transactions, you have to ensure that the foreign currency receipt is obtained within 9 months of filing the shipping bill, within 9 months of exporting the goods outside India. So that is mandatory. So how will you track this? See, for now, you will be going to the bank and asking them whether there are any bills outstanding which is yet to be knocked off. So now RBI has provided a separate portal. You can here track if there are any outstanding shipping bills which are unadjusted, which means that you have filed the shipping bill. You might as well have received the amount also, partial amount or full amount of ED. Once it is considered as it, and the bank realization certificate BRC has to be obtained. So here you can check the status, similar to IceGate, where you can see the status of refund, status of the bill of entries filed, the status of the shipping bill filed. Here you can check whether for all the shipping bills are pending for foreign currency, and also in this of imports, whether which are pending which have to pay. Even for the auditors, they can portal this, and if there are any unhedged foreign exposure certificate which are issued, that might enclose the link for that. So that's it from me for today. I think I have added some value today for you. So if there are any questions, I'll be happy to take. Thank you, everyone. Karthik sir, okay, you have asked how to mention GST turnover in ITR form containing in previous year documents included in current year. So GST turnover, you need not mention in ITR form, sir. In GSTR 9C, if you are filing, you can show it as an adjustment. And also GSTR 9, you can mention the previous year turnover. In ITR, no need to mention that, sir. In a private limited company, if the food arranged from outside caterer who are unregistered for employees working, is it mandatory to pay RCM by the private limited company? So for catering, it is not necessary to pay under RCM, sir. It is not required. Ilangovan, sir. Sir, PPT, sure, sir. We'll be sharing PPT. So Ilangovan, sir, okay, sir. I have made a note of this. I will surely ensure that if there are any other PPTs which are missed to be shared, I will definitely make it sure that it is shared, sir. Please wait for today, or one day you can wait, sir, for tomorrow. I will make sure that all the PPTs are shared. So one of the contractor, his service provided to other contractor. This is only service but not trade. Whereas in the income tax AAS reconciliation, it is reported purchase. How treated for filing ITR under section? Sir, actually, I am not able to understand the question properly. Shivappa, sir. You have mentioned that it is service income, but AAS, it is reported as purchases. Sir, you can request the supplier to revise the TDS return and deduct TDS under, report the TDS direct under separate section, sir. It is possible, sir. Challan can also be corrected. That is the only way. From whatever I understood from reading the question, I am answering, sir. Venkatachalapati, sir. Good afternoon, sir. In tax audit report, 35 manufacturing concern feeling is both. Or not. Sir, for manufacturing entity, you have to give those, sir. It is correct, sir. For manufacturing entities. MSME disclosure, how, sir? MSME disclosure, we definitely have a separate session regarding income disclosures. But 43H, the invoices that are outstanding as on 30/3/20 for payment has not been made within 50 or 45 as the case, you can report it over there, sir. If there are invoices in between those years, in between the year, and the payment has been made within 31st of March. Say, for example, an invoice pertains to December 2024, and the payment was made on 25th of March. Even though 15 or 45 days has been elapsed, but as on 31st March 2025, there is no outstanding. So for that reason, you can as well exclude it from 43BH reporting. Hari Dayalan, sir, thank you, sir. Me side by section 80C life insurance along with GST. Can we claim or without GST? Sir, 8 claim life insurance, you cannot claim input tax credit on that, sir. It is not possible, sir. It is blocked credit. Client exceeds threshold limit of GST registration but not registered as we to qualify audit report case of companies. Sir, company audit report you can mention it is a violation, and also there is a contingent liability as far as I am concerned, because it will definitely lead to GST payment. A demand will be raised you will have to pay it on a later stage. So definitely you will have to mention it in the financial statement as a separate disclosure, sir. If both customers and suppliers are traders, then MSME payment rules not applicable. Yes, sir. For traders, if in the Udyam registration your status is as a trader, then MSME the payment of 15 and 45 days and the disallowance as per 43BH is not applicable. You might be slapped with the interest if you are not making payment on time. Interest might be applicable as per section 15 of MSMED Act, that is separate. So for as far as 43BH is concerned, if they are trader, it is not applicable, sir. While filing income tax return under section 80C, like that you read, sir. Yes, sir, at 80C, I spoke about the situation where there is a proprietor and that proprietor is filing income tax return and claiming deduction under 80C. So if the officer, GST officer happened to see this income tax return, they might think that this proprietor is also doing a business, another business for which all the purchases he is taking input tax credit. So for life insurance also, he might have given his GST number, and there is a possibility that he might have also taken the input tax credit. So that is the situation I spoke about. In vertical financial accounts, accounting policy is mandatory for other. There is a separate guidance note for non-corporate entities. So you can follow that guidance note which is issued by ICAI, and if at all any disclosure is required, see if there are many stakeholders, if there are multiple parties which are involved in a partnership firm, or if there are many others who are substantially interested, for that in the financial statements, it is best practice to report all the aspects which are important to the stakeholders. The contractor service to other contractor only services, not purchase or sales, but the AS is showing purchase. How to enter in income tax? Yes, sir, I understood, sir. So it is only services, but here in the AS, it is. Sir, AS it is. It will be shown as purchases. It will be shown as a business purchases, right, sir? So it is not necessary that business purchases should be either from in the nature of services or goods. It is not necessary. So if it is reported as purchase of goods under 194Q, if it is reported as purchase of goods under 194Q, then you have to ask your supplier to file a revised TDS return and file it under different section. That is the only possible way out of it. If not, then that is not a problem, sir. My clients cross threshold of GST registration limit. When I apply for GST registration, the officer is not approving, sending a lot of unnecessary queries and rejection. Sir, I'm not sure from where you are, which state you are, sir. See, here in Tamil Nadu, generally, if you file GST registration application, then it is first reviewed by a central unit in Chennai, and then it is based on the address. It is then transferred to the assessing officer, and after verification, it is approved. So I'm not sure for what reason, unnecessary questions. I'm not sure what are the queries that are asked. I suggest you to review the return, review the registration application once again, and ensure that all the details as per the rules are being provided with. And in that case, it is highly unlikely your registration will be rejected. And if again you are facing the same situation, then you can raise this issue by preparing a covering letter, and also the ARN status. You can take the screenshot and then write to your jurisdictional commissioner. You can approach them, and I'm very sure that they will help you out, sir. Okay, photos with GPS witness. Sir, photos with GPS, it is being asked everywhere, sir. So I think might be because of many fake registrations. In the last 2 years, there have been many drives which are conducted by the GST departments across the state of Tamil Nadu and other states also, and they have identified many fakes dealers, like the bill trading, bill traders, such persons they have identified, And the registration, they have made stricter, sir. The registration, providing GST registration, they are now strictly verifying the application and only making the approval. So for that reason, I think it is best if you can approach your jurisdictional commissioner and explain him the situation so that he will be able to help you, sir. Okay. Okay, sir. So we'll share the PPT, sir. So I think most of the queries have been answered. If there are any more queries, I request you to definitely write to us in email or send us a message. So definitely we will see sometime soon again. There are more GST changes which are coming up in next week. GST rationalization or rate rationalization. We'll be having specific industry focused discussions in the upcoming weeks regarding those. So I invite all of you to take participate in those sessions also. So once again, thank you so much.